Hello everyone, good evening. So today we are here to discuss the Indian sectoral strength outlook of November 2018. Now by sectoral strength, we mean that how has each sector been performing with respect to the Nifty over the last few years right into November 2018. Now how do we quantify that? Simple, we just take make an index out of it, and then we find the ratio of each index of each sector with an index of Nifty from the time frames that we want. So we have typically selected 3 time frames for our analysis. One time frame we have selected in order to capture the entire sectoral cycle that was started in 2013. So we have taken a time frame which starts from July 2012. That is one time frame. Another time frame, we wanted to study the performance of each sector with respect to the Nifty after demonetization. So we have started one index series from November 2016, 10th November 2016, and one time frame that we have selected has been in this current fall, which started in September. So we have taken one series from 1st September 2018. Okay, so we will study the performance of all these sectors across these 3 time frames in the next few minutes. Now let's go ahead. Alright, so this is your July 2012 series. You see all these colorful lines which are looking like worms. Basically, all of these lines are depicting the performance of each of these sectors with respect to the Nifty. Now how does this work? It is simple. What you need to do is the line which shows 1.00 out here, that line is nothing but the performance of the Nifty, because if you divide Nifty's performance with itself, you're going to get a flat line. Now each of these sectors, we have started the series from 2nd July 2012, the first trading day of July 2012, and we have brought it up to date. So all the lines which are above 1.0, these are the sectors which have performed better than the Nifty. Okay, and all the lines which are below 1.0 are the sectors which have underperformed the Nifty. So if I were to see which are the sectors which have performed well and which are the sectors which have underperformed, alright, we can then create a sectoral ranking. So right there on the top, rank 1, okay, is Nifty Financial Services. So from 2012 till date, the highest performing sector has been Nifty Financial Services. Rank 2 is Bank Nifty, that line which you see there. Rank 3, which is that purplish line, that is the Nifty Consumption Sector. Rank 4 is the Nifty IT Sector. Rank 5 is the Nifty Automobile Sector, and rank 6 is the Nifty FMCG Sector. Now all these 6 rankings are the lines which are above 0. Now the lines below 0, okay, they go in this way. Rank 7 is the media sector, the line which is immediately below 0. You can see that this line has actually gone slightly above 0 and then again fallen below 0 in the last month. Alright, which means that it outperformed for a while and then again started underperforming the Nifty. Then we have the energy sector. Then at 9th place we have the Pharma Sector. Then we have Nifty Commodities Sector. And then we have the Infra Sector, the Metal Sector, and the Realty Sector. And at last, the most languishing line that we are seeing out there is the Nifty Realty Sector, right? So this has been the performance ranking of these sectors from 2012 till date in the Nifty. Now let's have a look at each of these sectors and study how their cycles have been in the last few years. So from 2nd July 2012, if you were to study the automobile sector, right? So this sector it has more or less always remained above 1. So it has always outperformed the Nifty, but over the last few months it has been falling. The outperformance of this sector with respect to the Nifty has been reducing from September 2016. You can see that the outperformance peaked in September 2016, and thereafter, maybe in the demonetization and all that stuff, it might have obtained a hit. And the performance of this sector with respect to the Nifty, it has been falling. You can also see the sectoral cycle, it is going downwards, and for it to reverse upwards, it needs to form some kind of a bottom. This is a bank Nifty. Okay, this has also been relatively above 1. You can see the one line somewhere in the bottom hemisphere of the chart. Okay, it's not halfway, it's below the halfway mark. Okay, and we have seen that this sector has consistently after 2014 or 2000 after 2014 it has consistently outperformed the Nifty, right? Also you can see some kind of a consolidation since July 2017 in this. If you can see, the outperformance has been sideways. Now I'm talking everything in respect with its performance with respect to the Nifty. These are not absolute price charts. Absolute price chart has gone up of this sector, but its outperformance, that is the velocity of this sector, the velocity of the move, is what I'm trying to show you out here. And it's clear that the velocity has actually taken a hit, or it has been going sideways over the last few months, and it is still confusing how this thing is going to play out, at least from this chart. We will form a few conclusions at the end of the video when we have looked through all the other sectors. So this is our Nifty Commodities sector. Okay, this has consistently remained below from 2012. I think the commodity cycle that peaked during the Chinese boom. After that, this sector has not been very favorable, except for certain points in time where this sector has moved up. But beyond that, this sector has actually underperformed the Nifty consistently, and it is forming some kind of a bottom here, but I don't know whether this would be the right time to enter this, or should we wait more. So maybe our next month's report will give us a better clue on how this sectoral cycle is performing with respect to the Nifty. But it's a clear case of a cycle that is bottoming out and not a cycle that is topping out. That is something that you can definitely realize from this chart. So this is a Nifty consumption sector. Okay, again you can see that 1.0 level is right at the bottom of the chart, which means that this sector has consistently given good performance with respect to the Nifty, and it has outperformed the Nifty over the last 6 years. Now again we can see that there is some kind of a weakness in the outperformance of this sector, and maybe the outperformance of this sector with respect to the Nifty may go down. So this velocity right now is on the lower in the lower direction. So again we need to wait and watch in this sector whether we will see for the next month whether we can buy into it or not. This is a clearly bottomed out sector. Look at this sector. It was outperforming the Nifty at the start in 2012. After that, it has fallen, it has bottomed out, and it has come up, and it is in a steady uptrend. So the energy sector, we can see that it has been going up, and it is likely to go up. And this chart out here, which is hovering somewhere between 0.9 and 1, is very likely to go above 1, and we will see stocks of this sector performing better with respect to the Nifty in the days to come. At least that is what we can understand from this kind of a chart. Nifty Financial Services, again you can see that it has been performing consistently well from 2015 or maybe from April 2016. But keeping in mind the last few things, you can see that there has been a dip out here in the performance of this sector, and then after that again it has bounced owing to a couple of stocks which have rebounded really well. But keeping in mind the current situation, this stock seems pretty scary. This sector seems pretty scary, but also you can see that this sector has moved sideways. Okay, one sec. Yeah, there we go. This sector has also, just like Bank Nifty, is moving sideways and it has not been moving up consistently. So is this a consolidation? Will the consolidation be deeper than this? I think if it breaks into a new high of outperformance next month, we should look at this sector. But other than that, we should just wait and watch for this sector to take its things to take their tune. This FMCG sector, okay, and we had 2012-13 when the market crashed. That is when the Nifty crashed. That is when we saw this sector outperforming heavily. After that also it has consistently outperformed the Nifty, and the chart seems to be forming some kind of a bottom or some kind of a consolidation. It's not a bad sector to be in at the current moment. This is the infra sector. If you see, this is just like the commodity sector that we saw. The infra sector is not been able to perform well or outperform the Nifty at all since 2012. Now this can be owing to several reasons: corrupt government and bad fundamental factors and bad execution and all of the above and none of the above. So when we are looking at the infra sector, there's only one thing I want to point out, that is this current level we have seen some kind of a double bottom in the underperformance of the Nifty. In Nifty infra sector, and I think that if this thing is anything to go by, maybe in a month's time it will give us a signal that its cycle is turning and we might see an upward move in the performance of the infra sector with respect to the Nifty. But it's too early to tell. It's just slightly promising that okay, infra stocks might be attracting some buying at this point based on what we are seeing out here. Again, at the end, when we are studying the other time series, we will come to know what kind of performance these sectors have done over the last few years and few months after demonetization and after the market started falling in September. We'll get there. So this is the IT sector. Again, we see that this sector has been a consistently performing, good performing sector, but it's also been a cyclical sector. And the cycle of this sector is moving up. It is still a good place to be in, at least that is what this cyclical chart is suggesting. So also keeping in mind the dollar being strong, and maybe it might consolidate to slightly lower levels, but at least here it is showing that from a cyclical perspective, the IT cycle is still moving upwards. You can still be in this sector and look for buying opportunities in this sector. This is the media sector. Clear cut case of an inverted cycle. Look at this sector. Okay. This cycle has inverted. It is now at the bottom. It's probably it will form a trough and then it will start moving up. We have to wait and watch, but there might be some bottom fishing opportunities out here. If you find some stocks which are available at a good bargain in this sector, please go ahead and buy into this sector. Metal. Again, look at this chart. It's a beautiful bottoming out pattern. Metal sector has bottomed out, even though it has consistently underperformed the Nifty. It is most likely to pull itself towards that one level, and for doing so it will have to perform well in the next coming few months, which it is most likely to do. So again, the metal sector, beautiful chart, looks really promising. This is the pharma sector. There you can see the inverted cycle. Okay, it peaked in 2015. It has been falling ever since. It did not participate in the rally of the Nifty. It has not been performing. It has been underperforming the Nifty since that time, and now you can see that its performance with respect to the Nifty has now reached 0.9, 0.95 levels. It won't be long before it crosses 1 and starts outperforming the Nifty soon. Also, pharma sector is a defensive, so since the outlook of Nifty has gotten bad, the pharma sector has started performing well, and it will continue performing well into the uptrend also, as we saw in 2014-15, where the Nifty and the pharma sector both were moving up simultaneously. So it will be very interesting to see. It's a very interesting sector, and for me it is a clear-cut buy. This is a PSU bank sector. Again, NPA problems have been there since 2012. It clearly reflects in the price chart, but as you can see, there are 2 or 3 small cycles out there which are forming, and this might be the third bottom which is forming out there. So there is some upside out here. Maybe in next month's performance chart we will be able to see it more clearly. This sector can definitely be opted for in an SIP perspective, because this is some kind of a triple bottom. Means you can see that it is receiving some kind of a support here at this level of underperformance, and it will not underperform the Nifty beyond this, and its performance with respect to the Nifty is likely to improve over the months, which means that if Nifty is going down, this fellow will not go as down as the Nifty. That is what I mean by the underperformance with respect to the Nifty. So a very interesting thing to be. Next month will obviously provide a clearer picture, but again, a few bottom fishing opportunities here. Instead of using my brains, I would just like to buy the entire basket, and I would probably buy the PSU bank ETF itself, and then wait for the consolidation in the sector to happen, because the worst seems to be over. Also, if the government is backing NBFCs, they are definitely not gonna let the PSU banks tank. So this is the realty sector here. Again, you can see a big, huge bottom being formed here. Realty sector has had a bad run since 2013. It is now also it formed a mini cycle between 14 and 17. Now it is at the bottom. Again, we'll have to wait and watch for another bottom to be formed here, and then the big cycle, which is from 2013 till date. There's a big cycle here. We can probably then look to buy it for that big cyclical opportunity, but right now it's a wait and watch, but definitely an interesting sector to look at. So with this, we have finished our sector. Now let us look at the September 18 series. Okay, so this series tracks the performance of each of these sectors from 1st September 2018. Now the rankings which I had discussed earlier for July series, in this series they are drastically different. So right at the top, the violet line which is there, okay, that is the metal sector. So clearly since September, since the market has been falling, The metal sector has started outperforming the Nifty. Okay, it's above 1. The infra sector, which is the dark blue line, which is coinciding with the violet line, if you can see the rightmost point on the chart, you will understand that infra sector has also been outperforming the Nifty. Then you can see the blue line, that pharma line which is there, and the light brown line, they are IT and pharma. Blue is pharma, the light brown which is touching the metal one, that is IT. IT is obviously performing well. We saw that it's in an upward cycle and it has also been doing well despite of the Nifty having fallen. Okay, and we are seeing pharma also performing really well since April, and it's consistently moved above 1. If you see this shorter time frame, means that in the market fall we are seeing IT, pharma, metals and infra. These 4 things have been going up. Also, the bank Nifty hasn't. In fact, if these are not going up, at least they are not falling as much as the Nifty has been falling. That's the more correct way of putting this. So these are like protecting your portfolio from the fall right now. They are not falling as much as the Nifty. And even surprisingly, the bank Nifty has been a part of this, owing to a couple of banks like Axis Bank and all, which have been rallying in this fall. So a very interesting mix out here. Apart from this, all the lines, all the remaining sectors are below the 1.00 line, so they have all been underperforming the Nifty. We have got commodities, energy, FMCG, consumption, PSU bank, media, auto, realty. Now this chart does not plot the financial services wala line. It has been omitted by our error, but maybe in the next month we will rectify it. But again, financial services have had the worst 2-3 months, so it will definitely have underperformed the Nifty in these last 2-3 months. So this is the September 18 series. So this actually reinforces few of the cyclical observations that we made. We saw that IT is in an upcycle. Infra might be bottoming out, and we see infra outperforming the Nifty in the fall. Metals is forming a nice round bottom, and we are seeing metals performing really well out here. Pharma, as we saw, that it's a brilliant buy right now, and it is in the long perspective, its ratio was 0.95. Over the last 2-3 months, its ratio has been over 1, which means that it has not fallen as much as the Nifty has. Is definitely a good portfolio. IT, which has been in a first cycle, which is what we observed, and the bank Nifty that we saw, bank Nifty is flattish, but it has not fallen as much as the Nifty. That is something that is surprising, but it is true. So these are a few observations that we have made over the last 3 months, over the falls. So this gives you an idea of which sectors are strong. Alright, now let's quickly have a look at the demonetization thing. Okay, after demonetization, which are those sectors which have actually done a good job and which are the sectors which have not. Okay, so clearly automobile tanked after demonetization, we saw that. But the ones that performed well after demonetization were IT, that is the green line on top. Then we have the blue line, energy. Then we have financial services. They performed really well after demonetization. Then we have FMCG sector. Then we have the Nifty bank sector, and then we have the Nifty realty sector. These sectors after demonetization period, that is after 10th of November 2016, have been above 1, which means they have been doing a good job. And then we have got a few sectors which are just at 1. We have got metal sector, which is just out here in the center somewhere. Then we have got the consumption sector and the commodities sector. That are those two overlapping lines which are there near Metal and consumption sector are those two overlapping lines there near the center, near just above one. Okay, and below this are all the underperforming sectors. You can clearly see that pharma, if you were to take the perspective from 2016, pharma is the second worst performing sector, and media has been the worst performing sector. You can see clearly from this chart. Then you have PSU Bank, which is the third line from the bottom, which is the third worst performing sector, and auto, which is the fourth line from the bottom, which is the fourth worst performing sector. So this should put things in perspective, that from the middle of that cycle, from the demonetization perspective, all those fellows who have underperformed, okay, they are trying to perform well. We have got pharma who's trying to perform well. We have got infra who's trying to do a good job. Uh, um, so I would like to conclude by looking at the September 18 series out here, and plus everything that we discussed, that the IT sector is still cyclically upwards, still maybe a buy. The metal sector is turning upwards, definitely a buy. The infra sector has been performing well in the market fall, so that is also a good sign. Okay, and the pharma sector has been performing well since May this year, definitely a good sign, worth buying. And IT, pharma, infra, metal. So yeah, these are the four things that you should look at in this market if you want your portfolio to perform better with respect to the Nifty. And yes, so this is the conclusion of this video. I hope that you like the video. It is a very different analysis that we put forward to you in this, and we will try and bring this analysis up in the middle of every month. So next analysis of this kind is going to come up in the middle of December. Until then, please give us your comments on how you like this, and if you have any questions, comments, doubts, clarifications, we would be really happy to solve them. So thank you very much and have a good day.